Welcome. It is time for another episode of The Wealth Defenders with Terry Cox. Consumer advocate Bruce Rosenblum here with you as well. Terry, it's been a minute since we got to sit down and do an episode. I'm so glad to be back with you.
Yeah, it's been a little bit, my friend. How have you been doing?
Oh, I've been doing as good as can be expected with all this market consternation going on. I've been watching it, and things are going up, things are going down. It's just a crazy time to be alive, don't you think?
Absolutely.
Yeah.
Seems like we're on a news cycle that changes about every half an hour, volatility everywhere. And yeah, it's interesting times to say the least.
I'm having trouble keeping up with everything. It's like we got to do a show now, like almost every day to stay on top of the market fluctuations. Maybe at some point when we hit 500,000 subscribers. That day is coming, by the way. Be sure to subscribe, by the way. Subscribe if you're watching. Well, Defenders, we do this pretty much almost every week. And it's all about the cutting edge financial advice so that you out there can get your money right. Mm-hmm. But speaking of getting people's money right, I tell you, I don't know if it's a good time or a bad time to be a retiree hopeful. So I just wanted to ask you, where are we with this stuff?
Well, to be a retiree hopeful, hopefully you've made some adjustments as you're getting to this point, because, we call that the retirement red zone.
Yes.
3 to 5 years before retirement, you want to start taking some risk off the table in case something like this happens. Mm-hmm. Because if you don't make any adjustments, depending on how deep things go, how aggressive your portfolio is, this could possibly push retirement back a year or two. Yeah. So you think about, we've all got this window of time. We're all running this race and we're all in different stages of the race.
Yes.
So as you're getting close to retirement, that's when we've been accustomed to saving and trying to grow all of our lives. And then all of a sudden we get to a point where we need to take some risk off the table and maybe switch to an income oriented portfolio. And sometimes that takes a little bit of work to do, because we're not accustomed to it. And that's why we need to keep these conversations going. We keep these conversations going with our clients on an annual basis, just so that we know where they're at. And because we don't want to go through something like this that's going to be detrimental to the portfolio if we don't have to.
Yeah, right. Because I'm thinking about what happened back in 2008 and how everybody's stuff just fell off a cliff. And I mean, do you see something like that happening within the next year or so? I mean, are we really going into this recession, or is there some wiggle room here?
Well, I think that kind of remains to be seen. There's arguments on both sides that we are not, but I think we need the dust to settle a little bit, because there's a lot of stuff going on. Yeah. And so over the next couple, 3 or 4 months, as the dust settles, let's see where we're at and what this actually really means for the long term. Yeah, for the short term, it can be very unsettling for sure.
Yeah. I mean, the headlines these days, they are alarmist. Everybody is saying the sky is falling. At least the last time that I checked, there was a headline that said recently that I read, Goldman Sachs predicts a 45% chance of a recession, up from 35% the week prior. Mm-hmm. So this is the talk going on right now. People are saying, oh my God, it's the end of the world. But, it remains to be seen, because people like to stir the pot, especially in the news world. We know that to be true.
Absolutely. I tell you what, if you go back in time and you pull headlines from 08, 09, the interest rate hikes of 22, 23, all the headlines look the same. Yeah. So, and that's why planning and talking with a financial advisor, someone who knows you personally, that's why that becomes so important to walk through things like this. As I mentioned earlier, we've all got this window of time that we're working with. From let's say it's 25 to 65. By the time you get to 55, 60 years old, you've already ran your race. You've probably gone through a number of pullbacks, corrections, recessions, and you've used them to your advantage. Especially if you're investing in a 401k or an IRA and you're making these periodic investments into the portfolio, you're buying at these deeply discounted prices. And it's scary. The oldest advice in the world is you buy low and you sell high.
Sure.
But sometimes when you're buying low, it takes courage because something's wrong, something's broken. And that's kind of where we are at right now.
That's right. It reminds me of a friend of mine who bought a lot of American Airlines stock when the airline markets tanked during COVID.
Oh, yeah.
And I wasn't sure if that was a good idea or a bad idea for him, but I think he did make a pretty good return on the investment because, of course, everything came back. Everything did come back, and I guess that's the big takeaways. The markets always go up on a long enough timeline. That's what a lot of people say around here. So,
well, yeah, they do over time, but I think that scary scenario is when you're getting close to retirement, or maybe you've just stepped into retirement.
Yes.
What if you retired in, September, October of last year, things are going fantastic, and all of a sudden we're in this. And especially if you're taking money out of your account. So let's say I'm going to be taking X number of dollars a month out of my account. Yeah. Well, how am I going to take those dollars out? If you haven't made adjustments to your portfolio and it's all stock, it's all equity, and now the values are down 10, 20, 30%. The money's there, but you have to sell more shares to raise that cash, and you need that share preservation, producing the income for you over time. That's going to give you the longevity. So you don't want to sell too much when things are down, because we call that sequencing of returns.
Yeah, right.
And that could be detrimental, especially in the first year or two of retirement.
Oh yeah, I wouldn't want to be in that scenario right now. To have newly retired and thinking to myself, hey, I'm done. I made it. I crossed the finish line. It's time to enjoy myself. And then seeing the market just collapse in front of my eyes. Oh, God, that's horrible. And with that in mind, let's go ahead and put that number on the screen right now. You out there, be sure to call that number for that no-cost, no-obligation financial review. Also, visit tdc.financial. Terry Cox is leading TDC Financial, and for good reason. He's providing people with the tools they need to be happy and successful in retirement. And that's why we do this show, isn't it, Terry? We want to have more people be happy and successful in their golden years, right?
That's right. That's right. So if you're a pre-retiree and you're listening right now, let this be an object lesson for you. What happens if you step into retirement and this happens? Let's have those conversations now. That is why income becomes very, very important when you're in retirement. So if we can have those conversations now, say, okay, you're going to retire in the next 3, 4, 5 years. Let's talk about your budget. How much are you going to need on a monthly basis in retirement? And let's create that kind of income, whether it's through dividend paying stocks, income annuities, whatever the case may be. And then guess what? When something like this happens, you don't have to sell anything to raise the cash you need. You have it coming in.
Absolutely. And speaking of that, Caleb Silver of Investopedia recently said a couple things in this same vein. I want to play a clip here real quick. Let's listen to what Caleb Silver had to say about this stuff.
Okay. But I've been through a few bear markets, and none of them feel very good at all, and corrections don't feel very good either. But I do know that we're always due for at least one correction, a 10% drop or more once a year. I know we're in for a bear market every 3 to 4 years. We haven't had one since 2022. It ended in October of 2022. So I know that these things happen, and I know that the first 2 times it happened, I was too scared to do anything. The third time it happened, I backed up the truck. And that turned out to be a great thing for me to do, to buy the dips, but also load in when interest rates were low, stocks were on sale, and that was a good move. But for people who have long-term time horizons, keep buying, and especially when things get lower, definitely keep buying, because then you're lowering your average price, your dollar cost averaging in.
Bingo.
You mentioned that long-term time horizon just like you did, so I'm curious to get your take on what Caleb Silver had to say here.
Oh, that's absolutely true. Yeah. And, if you think about the last 5 years, this is like the third time that we've gone through some chaos like this. We had COVID, we had the interest rate hikes, and now we have the tariffs.
Yeah.
So that has created conversations, because we're always talking about diversification in portfolios. We're also now building some cash or cash instruments into client accounts, particularly if you're, pre-retiree or you're getting ready for retirement or you're in retirement. Now you've got some cash in the account that you can take advantage of things like this.
Okay.
Because if you've gone through this in your lifetime and now you're in retirement, you've got your income covered, you've got your day-to-day covered. Inflation's not going away. So you still need, and it's never going away. So you're still going to need some growth in the portfolio, and you look for opportunity. When is opportunity? It's right now. So if you've got some cash in the account, if we've created an extra bucket in the account for cash for opportunities, now, start deploying. And I like the dollar cost averaging piece that he mentioned, because, you might not get the lowest price. You might buy today things drop, because we bought some Amazon stock in portfolios yesterday, and when I came in here, we were down a couple bucks here this morning.
You're right.
Probably going to buy some more today. So it just keeps lowering your average price per share, and you're actually adding more shares to your portfolio. So when, a year from now or 18 months from now, when things have turned around and the prices are back up, you've got something nice to sell, and you've got that growth element in the portfolio.
That's right. You're holding on to a position that can pay off later. And I'm reminded of this meme video that I saw a couple days ago. See, I love the crypto memes. I'm on TikTok. I watch all this stuff. Shout out to the crypto investors out there. You guys are playing fast and loose, but sometimes you do win. Sometimes. But this meme, there's a guy and he's watching the arrows go up and down. And of course, the crypto coin tanks on the screen. And he thinks to himself, I'm not going to sell. But then it keeps going down and down and down and down. Then he says, I can't sell, because, of course, at this point, his position is so far in the gutter that he cannot afford to get out of it. He has to wait and see if it goes back up. But I think I think that has to be the mentality sometimes. Even if you go down really far, eventually, if you wait on a long enough timeline, the market will kind of rebound. I hope. Is that the takeaway here?
Yeah, if you think back to the financial crisis, that all started in like October of 2007.
Yes.
And it went through March of 2009.
Oh,
so that's a long window. If you're looking at your statements for a year and a half and you're just watching, down.
Yeah.
Everybody gets to the point where, where's the bottom? What am I going to do? But But if you sell, you've sold it at a loss.
You've locked in. Yeah.
Yeah, now you've got a whole new set of problems to deal with. When are you buying back in? Because you never know when the bottom is. So looking back, we know that the market was falling, but on March 9th of 2009, that was the bottom. And then we went on like, what was it, a 5 or 6 year bull run? Sure. And if you were out, if you sold your Coca-Cola or your Verizon stock or whatever, when are you getting back in? Now you're buying back in at a higher price than you sold. You probably missed a couple of dividend payments. So yeah, it can be a vicious cycle. So it's hard to do. It's hard to take the emotion out of investing because it's scary. You read these scary headlines, you're looking at your statement, you're like, here's my life savings. It's down, whatever, 20%, 30%. That's hard to look at after a while.
Yeah.
So, but that's why it's so important to look at your portfolio, sit down for a review every year, and do some rebalancing. This could be a good time to rebalance right now. So that's why you have to have conversations with people who know you, who know what your goals are and what you're trying to accomplish, and make those adjustments over time. Because if you're retired, you shouldn't have that much of your portfolio in aggressive stocks or growth stocks. Because you've already done it. You've already made your money. Let's not lose it now.
That's right.
Yeah.
The gambling is for people in my demographic. I can afford to play a little bit fast and loose. Not that I do that. I'm not a crypto investor by any means. That's too risky for me. But I think it's cool to have a financial advisor in your back pocket, because, if I was in a bad position, I would want somebody telling me, hey, Bruce, don't sell. Don't sell yet. Just ride it out. And, you can come back from this. Just wait until things get a little bit better. I think that's one of the benefits of working with somebody like you at TDC Financial.
Mm-hmm. Yeah, for guys like you, pull out your checkbook, start buying.
Back up the truck, like Caleb said. Yeah,
that's right. That's right. Because I think we've talked about this in the past. If you pulled into your local grocery store, your local supermarket, and there was a sign out front that said, everything's on sale today, it's 20% off. Oof. You wouldn't go, I can't buy groceries today. Everything's on sale.
Yeah, right.
You'd buy 2, right?
I'm buying all the eggs. I'm buying, yes. like when those fuel prices tanked and everybody decided to bring their gallon jugs and their massive tanks to fill up. I saw somebody with a trash bag putting gas in a trash bag to try to cash out like that. But there are cleaner ways to do that. It just means working with Terry at TDC Financial, because he can make sure you do it cleanly, right? And you've got appointments all the time, don't you?
Yeah, we set aside appointments every week for our viewers and our listeners. Email us, give us a call, set up some time. Let's have a 20, 30 minute conversation. It's all complimentary. Let's figure out what you're trying to accomplish and see what we can do to help.
Yeah, right on. Let's put that number on the screen right now. If you're a longtime viewer, you already know. If you're new, the number on the screen is your conduit to a better financial future. You just got to pick up that phone, do your due diligence, and call Terry because he's got a no-cost, no-obligation financial review available for you. Also, TDC.financial. That is the launch pad for this entire program here. You go there, you're going to see a menu of services that you can take advantage of because Terry, he's a wealth defender for a reason. I mean, what more can I say, right?
Yeah, and there's a lot of resources on the website as well. We've got other things. We've got videos. We've got these podcasts. So hopefully there's some information on there that really resonates with the listeners. And like I said, let's have a no cost, no obligation phone call and see if we can work together.
Absolutely. Well, we are up on time today, Terry. I wish we had more time, but is there anything you want to tell people out there before we shut down for the day?
Yeah, I know we're going through a lot of stuff right now, but it will be better in the long run. I don't know what that time frame is, but don't lose hope. And if you've got the means, take advantage of this and buy some stuff.
Great advice. Hold the line. You guys do that out there. We will do the same here. Again, number on the screen. Let's shut this one down. For Terry, this is Bruce. We'll catch you next time on the Wealth Defenders.
See ya. Thanks.